Hey there, welcome to Insurance Tips for Contractors. I'm your host, Abe Boling. I have been insuring contractors as a specialty for about 16 years. I've insured thousands of contractors in just about all lower 48 states here in the United States of America. I appreciate you joining us. We want to provide value to your construction business, and we want to let you know just different tips and hacks and help you better understand what's going on with your insurance policy and what your options are. Today, on episode one, I wanted to cover the number one question that I get when contractors come to me for insurance is how do I save money on my insurance policy without sacrificing coverage? So I've come up with a list of the top 3 ways that I've been doing that for the past decade and a half plus for my contractors on how I save people money without sacrificing the coverage that you actually need. So number one, the first step we always take is assess your current policy. Are you covered properly? Are you overinsured? Insurance companies tend to do a real good job of auditing folks when you have a good year and charging the premium. Very rarely will an insurance company call and say, hey, we just want to check to make sure that if your revenue went down, that we're capturing that as well. So that way, you get a discount on next year's policy. So that's the very first thing that we do. Policies are based on revenue, how much money your business generates, and they're based on payroll, And we're going to dig into that just a little bit more here in just a second. But if your revenue figure was higher last year or the year before, or if your payroll figures were higher last year or the year before, and you business has kind of either shrunk down or maybe you had a big job that was kind of a one-off. Those are the kind of things that are just ripe for the pick and that can save you actually a lot of money on your insurance policy. So those are the very first things we want to check out is are you properly rated? And then are the coverages that you have there making sense? And what I mean by that is, are you paying almost as much to replace your tools as it costs to insure those tools over a few year period of time? We take into account how much you're paying, what the deductible is that you'll pay if there's a loss, and then what the coverage amount is. And sometimes, not all the time, but sometimes it just doesn't make sense to carry that insurance policy at all. So the very first thing we want to do, again, just to recap step one, is we want to do a complete recap of your entire policy, everything you've got going, to make sure that it makes sense for your business, which leads me to number two. Number two, consider your business specifically to determine if you should be on a policy that's more heavily, the rate is more heavily influenced by revenue, how much money your business brings in, or by payroll, how much you pay out to your W-2 employees, not your subcontractors. Some business models, and this is often in, like a general contractor, new home builders or sometimes remodelers or roofers, there's not a whole lot of W-2 payroll on the books. It is more so like subcontracted work where you're paying a subcontractor to come in and do the work. So in that instance, it really makes sense if you're heavy on the revenue and you're light on the payroll, we want to try to put you on a policy that's rated on payroll because that's going to save you a ton of money over a policy that's rated on your gross revenue. Conversely, a lot of times electricians or HVAC, plumbers, those types of businesses oftentimes are really heavy on payroll and not as heavy on revenue. And I mean the ratio. So, if you have a company that's doing maybe $1 million in revenue, maybe they're paying out 600,000 of that in payroll. So we really want to look at the comparative differences between the two, because in that scenario, the $1 million in revenue and 600,000 in payroll, a lot of times it makes more sense to go with a revenue based rate. So we want to look at all of those things though. In step two, we want to determine if a payroll based rate program is better for you or a revenue-based rate program is better for you. And then the last step number 3 is bundling policies. And I won't get into this too big because we kind of, you can say bundle till you're blue in the face because everybody's done it online and on TV for the past, eons of years. But in construction specifically, Oftentimes you won't find one carrier that will write everything. Sometimes for our tradesmen, our electricians, our plumbers, heat pump, HVAC, stuff like that. Those type of policies we oftentimes can bundle. Roofers, general contractor, new home builders, house flippers, stuff like that, forget it. It's not going to happen. Excavation contractors, you're just not going to get one company to write every type of policy. So we want to strategically bundle the policies that we can. Sometimes we'll have a company that maybe is a little bit higher on the workers' compensation, but if they'll also write your auto, they can save you thousands of dollars on your auto policy, which offsets the couple $100 in increased premium for the workers' comp. So we want to be looking at everything on a real holistic level of exactly what the total premium is going to be amongst all the policies that you're needing quoted rather than just individual line item. So, again, bundling the policies, not necessarily for the best rate individually on the policies, but to unlock other carriers that will write things like commercial auto that maybe they wouldn't do it by itself, or monoline as we call it in the insurance business. So 3 steps. Number 1, assess your current policy and see if you're covered properly. Are you overcovered? Do you have outdated figures? We want to make that assessment. Number 2, we want to determine if you should be on a revenue-based rate program or a payroll-based rate program. And we need to check out all of them and see which one makes more sense for your company. And number 3, bundle your policies, especially your workers' compensation, auto, and tool policies where you can, to make sure you're getting the best access to the companies possible. All right. We'll see you in the next episode on Insurance Tips for Contractors. Thanks so much.